Good evening. As we move through the opening weeks of the second Trump administration, economic data from official sources is beginning to paint a picture of how campaign promises are translating into measurable results. Today, we're looking at what the numbers show, what experts are saying, and why these early indicators matter for everyday Americans. During the 2024 presidential campaign, former President Trump made several specific economic commitments to voters. According to public campaign statements and rally transcripts, these included promises to reduce inflation, lower grocery prices, bring down interest rates, and create millions of manufacturing jobs. These pledges became central themes in his economic messaging throughout the election cycle. The Trump administration officially began on January 20, 2025, meaning we now have nearly 4 weeks of governance to examine. While policy changes often take months or years to show measurable impact, analysts typically look at early indicators, executive actions, and initial economic data to assess the direction of an administration's economic approach. It's important to note that economic conditions are influenced by many factors beyond any single administration's control, including global markets, Federal Reserve policy, supply chain dynamics, and consumer behavior patterns. According to recent reporting from multiple news outlets, several key economic metrics have not moved in the directions outlined during the campaign. Let's look at what official data sources are showing. The Bureau of Labor statistics released employment figures indicating that manufacturing job growth has remained relatively flat in recent weeks. Reports suggest that no significant surge in factory employment has occurred since Inauguration Day, though economists note this time frame is quite brief for structural job market changes. Regarding inflation, the Consumer Price Index data from the Department of Labor shows that prices have not declined substantially. Grocery prices, which were specifically mentioned in campaign rhetoric, have remained elevated compared to pre-pandemic levels. Financial analysts note that deflation in food prices would be unusual outside of recession conditions. Interest rate watchers point out that the Federal Reserve, which operates independently from the executive branch, has maintained its current policy stance. The central bank has signaled that rate decisions depend on inflation, data, and employment trends, rather than political timelines. Trade policy observers have noted that while the administration has announced intentions to renegotiate certain international agreements, no major trade deals have been finalized that would immediately impact consumer prices or manufacturing competitiveness. Energy sector analysts report that while domestic oil production remains high, gasoline prices are influenced primarily by global crude oil markets, refinery capacity, and seasonal demand patterns.